Right. Hello. Welcome to another Ask Andy Live, my weekly Q&A for you guys on YouTube up here, on Instagram down here. Explain why I'm looking in two different areas at times. For you to ask me your money questions. What do you guys want to know about most aspects of personal finance and everyday household money? I'll do my best to answer if I can. When you come along, please do just say hello. Tell me who you are. I normally have a question for you guys as well. I haven't thought of one of those just yet. What could that be? What's been going on this week? I'll think of something as we go along. But do say hello, but you're also very welcome to lurk. And if you've got a question, just do that. So hi to Mark and Sidhu and Katie over on Instagram, and also to Coley on Instagram as well. And we've got a question already here from R over on YouTube. So let's add that through. Where is the best place to put spare money? I don't need instant access as long as I can get within about 80 to 90 days. Building societies are very poor at the moment. So I actually just did a video on YouTube about the update. I do it every single month, an update of the best savings accounts for August. Because can you believe we're in August already? I've got things happening in September, and I had a look. I'm like, oh my God, it's only a month away. September is a month away. I can't believe it. Anyway, so I've just got a video right now. So do check that out over on the YouTube channel. Get this a little bit right here. But I would say if you want to get the best interest right now, it depends how much you've got, obviously, and you want to get it within about 80 to 90 days, so you don't want to fix for longer than that, then the best accounts are the ones which I detail in the video. But at the top of my head, very quickly, Virgin Money M Plus current account will give you 2.02% on the first £1,000 you have saved in there. If you've only got £1,000, perfect place for you. If you've got £2,000, you can potentially open up another one of those, have £2,000 in there. And you can have as many as you want, but the more of those accounts you open, it's a bit of a faff, and your time and effort might be better spent elsewhere. Beyond that, again, even those notice accounts probably still aren't your best bet, because you could be looking at the Chip Plus One savings account. You can get 1.25% on that for free for the first £2,000. If you want to save over £2,000 up to £10,000, there is a £1.50 fee every 4 weeks, which means you need to have at least about £4,500, £5,000 for that to actually the interest you earn to outweigh the fee that you're paying. So really, it's about £5,000 plus. £5,000 plus in that account. But again, after I would say you filled up those Virgin Money accounts, or you could look at the Club Lloyd's current account. This one will give you 0.6% on the first £4,000 in there, but then 1.5% on the next between £4,000 and £5,000. So if you had £5,000 in there, that's about 0.78%, which is better than you'll get elsewhere, and not too far off some of those notice accounts. There are some notice accounts which I've detailed in an article over on the blog that might be a better option to check out, but do take a look at that. Hello to Nikki and to Savicor and to Grown American Superfood. We have a question here from Jose who says, do you know of any current account switching offers coming up? Now, actually, there's a new one that's been launched today, and this is only via Money Supermarket or Money Saving Expert. They've negotiated an exclusive deal with HSBC. Now, the HSBC offer ended just last week, a week with no deal, and there's a new one back. But this is higher paying than what they previously had, 140 quid. So that is, trying to think now, is that the highest one we've seen in the last year? Possibly. This might be the highest one we've had since the pandemic began. It could have been 150 quid in there somewhere, or a combo of deals, but certainly the highest one for a decent while. Now, the terms and conditions are exactly the same as they were for the HSBC switching deal, which ended, say, a week or so ago, where you cannot currently have an HSBC account, and you cannot have opened a First Direct account since the 1st of January 2018. I want to say the details are over. I've linked to them over in the big bank switching article I've got over on the blog. The Halifax Ultimate Rewards bank switching offer, where you can get £100 if you switch into a new Ultimate Reward account, and this one comes with a £17 fee. But when I did this, as soon as I got that switching money, I downgraded it to a free account, didn't pay that 17 quid, so I got 100 quid. Now, this was a year ago, and it might be to do with timings and stuff, but even at its worst, let's pay you, say, £17, pay £17 for 1 month, you're still up 83 quid. That ends tonight. So you literally have got the next, 5 hours, probably less than 5 hours to open that account, get accepted for it, and start the switch if you want to get it. Again, loads more information about that over on the blog. We've got hello from Rukio. Thanks for watching, Rukio. Mick says, are you taking questions on broadband? Yeah, go for it. Got a question about broadband? Then fire away. Let's see if I can help you. Don't necessarily know all the best deals right now, but I can tell you there's definitely what I think you should be doing in order to bring that broadband price down, particularly also if you package it up with your TV and mobile phone. We can chat about that. So Mick, yeah, do ask me that question. Rob says, evening Andy, glad to be joining us. It's great to have you here as well, Rob. As I said, guys, if you guys have any questions, we've already had a few of them over on YouTube. Just post them in the comments and I will do my best to answer them. So Rimsha says, any information about, now I always say this wrong, Sharia accounts. I think that's the right way of saying it rather than Sharia accounts. These are, for those of you who don't know, these are bank accounts, current accounts, savings accounts, things like that, which are compliant within Islam. And within Islam, one of the key tenets there is that you cannot give interest. So that means lots of other savings accounts out there which offer interest. If you are Muslim, you can't have one of these accounts. However, there are a decent number of Sharia-compliant banks and savings accounts out there. Now, I haven't checked today, so this could have changed since I last looked yesterday. But the best fixed account is a 1-year fix. Across the board is actually Sharia-compliant. Sharia, I keep getting it wrong. Forgive me. Compliant offers 1.1% for a 1-year fix. And I should point out to you actually again, if you don't know about these accounts, they do give a return, 1.1%, right, for this particular account from Greenhouse. Greenhouse Banks, not Greenhouse, something like that. Again, all the details, I've got a list of these over on the website, becleverwithyourcash.com. Just go to the best buy section and the best savings accounts. You'll see all the ones there. But they give you an expected return instead. So pretty much you will get the interest. It's just not called interest and it'll be done in a slightly different way. Gatehouse Bank, that's it, 1.1% for a 1-year fix. If you want to be more flexible, then obviously the rate will drop down. But actually they are still pretty competitive and some of the, right up there with some of the best, if not better, than some of the best easy access. But generally when I've been looking at this, tracking this over the last year, there have been those 1-year fixes where they've been the best. So hopefully that answers your question, Rimsha. Abdallah, good to see you again. Regular here on the lives. Says, good evening, I hope you're well. How's my day going today? So I think I mentioned this last week. I'm having a great time right now because I'm watching the Olympics. I'm not starting work until about 2 o'clock in the afternoon. I'm working later. Today's not the only time I'm working sort of past 7 o'clock, but it's been lovely. I've been waking up, catching up on the overnight sports, watching some live things, and then starting work a bit later. It's been lovely to have that flexibility. So yeah, having a pretty good day, but then working hard now. Sean says, right, this is a really good question from Sean. News to the channel, Andy. What are your thoughts on Monzo's annual report? Do you think they could go out of business? So I haven't seen a huge amount on this one just yet. I haven't looked at it myself, but I've seen a few bits and pieces talking about Monzo's annual report. Now, a year ago, the previous annual report talked about how they were a going concern. They had enough money to keep going, but there were risks around it. They were a bit worried about it. 1 year on, it seems those risks are still there. They're saying it in their annual report, and they have auditors who look at it as well, who sign off it and say, yeah, there's enough money in there to keep it going right now, and we expect to get more investment, more money coming in to keep us going. But it doesn't look like things are massively healthy. Now, we are still recovering from the pandemic, and the things they want to do haven't necessarily been easy to achieve. So there is absolutely a worry there, I think, for Monzo that they could cease to exist, or cease at least to have the funds to keep going. Now, what I would say to you, if you are a Monzo customer, don't really worry about it too much because, as I regularly say, it's always worth having more than one current account anyway. So it doesn't matter who your main bank account is with, I would have at least 1 or 2 other accounts with money in them, or savings accounts, whatever it is. You've got access to banking and access to cash and savings if there was a problem with a bank. And it could just be something like the app goes down or whatever it might be. So I would do that anyway, whatever bank, regardless of the situation with Monzo right now. But I would also say that Monzo is really, really popular and it is doing really well, and it is a really, really good product. So if they got to the position where, look, we've run out of money, I'm pretty confident they would be snapped up. I don't think they would just fall out, because there's a lot of money, a lot of value still there, which hopefully someone would snap it up and they would continue. Now, if they continue, that might not be in a position that you would want to stay with them. There might be some sort of fundamental changes that stop it being such a good proposition. But that's still going to happen, I would imagine. I can't imagine it just stops one day, sorry, you can't access your app. I think that would carry on. However, if worse did come to worse and they did stop, they are covered by the Financial Services Compensation Scheme. Any sort of savings account or bank account that you look at, look for the FSCS, Financial Services Compensation Scheme, a little logo. And this basically means the money in there is backed by the government up to £85,000. So if they were to go under, you would get that money. You do not lose that money at all. Any money you have held within Monzo. So there could be that inconvenience of the account going and maybe a bit of a wait for that money. But as I said, if you've got those backup accounts, you can just get your salary moved to that new account. You can get your direct debits moved to that other account straight away if the worst came to worst. Interested to know what you guys think if you are Monzo customers. Is this something you are worried about? Do let me know. A few newbies over on Instagram. Mr. Andy, Gary, Bucario, Rudolph, Man Your Money, and In the Outdoors. Nice to see you guys. Any questions, just do shout them in the comments. And Bascotti, nice to see you as well. We have got one here from Sidhu72. I've read a few articles that you should use your credit card over a debit card as this reduces any risk. What are your thoughts? And can you recommend any ethical credit cards? So, okay, should you be using a credit card over a debit card? Now, the most fundamental thing here when it comes to using a credit card is you have to make sure you have the funds to pay for what you're spending on there. A credit card is a debt. You are borrowing money on that little bit of plastic, which you then have, let's say, it depends when you spend on it in that cycle, that monthly cycle, but let's say you've got up to a month for you to then pay that money off without getting charged interest. If you get charged interest on a credit card, that is a bad thing. Yes, there will be circumstances where maybe that can't be avoided. There are alternatives, and I've talked about that a lot. If you want to know, just ask me and we'll go to that later on. But broadly, you want to be clearing that card completely. So if you don't have the money to spend, don't put it on a credit card. If you find budgeting pretty hard, stick to a debit card. Now, when credit cards can be advantageous, a couple of reasons. One, if something costs more than £100, you are covered by something called Section 75 of the Consumer Credit Act. And that means that if it doesn't arrive, or maybe it's a booking and the hotel goes bust or whatever it might be, the credit card provider is jointly liable for the losses. So you can go to the Amex, Barclaycard, whoever it might be is providing this credit card, and they, under the law, not just like a company decision, under law, they have to give you that money back. Yes, there'll be a little bit of investigation and prove that you aren't trying to defraud them, but you will get that money back. And you don't have to do that after you've gone to the shop, the holiday company, whatever it might be. You can go straight to the credit card company. It's not like if they don't give you the money, go here. You can do it. You can choose which one you go to. And that, if something is difficult and you're not getting any response, then you could go down that route. There are a few sort of grey areas here. For example, this only counts if you buy something directly from the provider. You, as the individual, directly from whoever is providing the product or the service. If you introduce a third party in the middle, you're breaking that direct chain. So your relationship is with a third party, and that third party has a relationship with the product or service. Good example here is things like holidays. So you're booking a hotel over here. If you buy it directly, you go straight to them, you're covered, as long as it costs more than £100. If you go via a website or something like that, then you will lose that protection. Probably. It's a bit of a grey area, similar like tickets. If you bought from Ticketmaster, does that break the chain from going directly to the O2 or something like that? Maybe. It's a bit flexible, but you get that extra protection. The other advantage of credit cards, or the other main advantage of credit cards, is cashback. If you are confident that you can manage your money and pay off everything that you spend on that card, and you're not going to spend more because you have a credit card, you can earn cash back. And I just did a whole video about the best American Express credit cards on YouTube, and a whole article rounding those up over on the website as well. So do check that out, because American Express cashback credit cards are the highest paying ones. So hopefully that one's useful. Hope that answers your question, Sue. Oh, and in terms of recommending ethical credit card, don't know, I haven't looked into this into detail. It's a good one to think about. I will do check that out, because I'm sure there might be some providers who perhaps are particularly focused on the ethical side of borrowing. What I would say is you can't go far wrong if you've got a credit card from someone like Nationwide, because Nationwide, as a building society, and a pretty big building society at that, the vast majority of their money that they have is going towards lending for mortgages, hence the name building society. That's where they came from. So it's not going to be a situation where if your money is with them and they invest it elsewhere, or any charges or whatever comes into play, it's not going to be going to things you might consider to be pretty dodgy. I haven't looked into detail though about other ones. If you guys know of any other ethical credit cards, do shout. It's possible that Triodos have one, did a whole review of their current account recently. I don't know about credit cards, but definitely one to think about. You're probably unlikely to get cash back on them though in that instance. Loads more questions here on YouTube. Alex says, thank you for the videos, always very good. The IFTT video was my personal favorite. I save money every time you release a video using IFTT with Monzo. That's fantastic. I like that. I didn't know you could connect it. So if you want to check that video out, go to YouTube, just Google not Google, you can't Google it. You can Google on YouTube technically, but search within YouTube, IFTT. That stands for if this then that, and then Monzo, and whack my name in it as well. And this is essentially, it's a really great feature of Monzo. You connect it to IFTT, and it means when a particular event happens, and this has to be connected via an app. So for example, it could be when it rains, your weather app says it's raining. You can then tell another app, in this instance Monzo, to put 50p into your savings pot, like a literal rainy day savings fund. Or, which is fantastic, as Alex is doing, if I release a video, then you can save you some money if something happens. Love that. That's fantastic. Jose says, any idea when the next 25% off 6 bottles of wine at Sainsbury's will be back? Don't know. I mean, I wouldn't be surprised if we get one close to the bank holiday weekend. They often do these deals, all the supermarkets around the bank holidays. They might do it before that. We've seen a lot of them this year, much more frequently than I would say we have in previous years. This seems to be like the offer they like to run. So I just say keep an eye on it. If I spot it, I will share it in my on the website and on my weekly newsletter. If you haven't signed up to that, becleverwithyourcash.com/newsletter. Every Thursday you get the best of the blog, the podcast, the YouTube channel, the social, all that kind of stuff. But I will share if I spot it. If you guys let me see it, then let me know. Tweet me as well. We'd love to get ahead of that. Rob said it's Gatehouse. Yeah, that's right. That's the Sharia-compliant and ethical savings account that's out there. Tracy said, am I aware of any deals coming up for Sky Sports with Now? There will be something, I'm sure, when the football season starts in, 10 days now? Something like that. But it might not be advertised to everyone. Sometimes they send out offers just via email to existing customers. So keep an eye on your inbox. If you have got a Now TV is what it used to be called account, make sure you are signed up to receive these emails. If you haven't got one, then can you sign up without signing up for an account? Possibly, but there are new member deals as well. So you want to look out on both of those. If I see anything that is available to everyone, and I will be keeping an eye out for this because I know the football is just weeks away, I will let you guys know. Again, that newsletter is a great spot to find out if those deals are happening. Copper and Rubber says, evening Andy, evening Copper and Rubber, good to see you back. Scott says, any experience using the Raisin Savings Market platform? So Raisin is a website which has loads of different savings accounts linked to it. So you open up the savings account via Raisin. Sometimes the accounts are only available via Raisin. And that's a good spot to go to if you're looking for the best accounts. If I spot an account and it's via Raisin, and that article I said I have over on the blog, I will say it's via Raisin. The other website that I always recommend people check out is something called Savers Friends. It's what I use to find out which accounts are on offer. So you can always go directly there as well to see what's available. But Raisin's quite good. It has got a welcome bonus on some accounts as well. Ranges from 50 quid. They've cut it a lot over recent months. I think the most you might be able to get is 30 or 40 quid. But to get that 30 or 40 quid, you've got to be saving a huge amount of money. Even to get that £5 bonus, you need to have a decent deposit in the first instance. But yeah, hey, if the best account you can get is via there, and if that little bonus gives you a little bit extra, then I've got no problem with it. But it was not necessarily the place you should go to first. You should go to whichever is giving you the best return on your money first of all. So Andrew has asked, what's the best place to put £200 a month with Access? Filled up the Chip Plus One account, the Virgin Money SM Plus current account. What about Marcus? Can you renew their bonus at the end of the year? So there's two things there. Let's do the last one first of all, Marcus and the bonus. This bonus they're giving 0.1% for 12 months is for existing customers. There's a whole video and article you can check out. Explain how to add this to your account, because if you haven't added it on manually, you'll be getting 0.4% most likely. Newer customers who have signed up in recent weeks will be getting that 0.5. Although I haven't checked today, but other accounts are starting to boost up. You can get 0.6% with Synergy right now. So it could be that we see Marcus and others start to push up again some more. But interesting to see how they do that. Will they make us add another bonus on? Now, will that bonus renew at the end of this year? No. They might just have a higher rate. They might put a new bonus in for you to go. But as it stands, that bonus is for 12 months at 0.1%. And I wouldn't say it's the best place for putting £200 a month, because there are regular savers out there which are offering at most, well, at £200 a month. You could look at the NatWest or RBS digital regular savers. You do need to have current accounts with either or both of those accounts, but you can have their attached regular saver, digital regular saver, with both of them. So you could have two, but you can put 50 quid a month into those. But that is a high rate of interest. It's capped at £1,000 on there, and I think you can take the money in and out. Now, there are lots of other options given between 1 and 1.05%. Coventry Building Society 1.05%, but I'm not sure about the flexibility for taking money out there. Again, do check out the article on the blog. I've got a list of those accounts with the links that take you through to the banks, whether you need to have a current account with them or whether you can just open it up straight away. And you'll be able to see which ones will let you take money out and which ones require you to have the money in for the full 12 months. That's one of the problems with a lot of the regular savers, is that cash is locked in there for 12 months. Jiri says, any thoughts on the Bank of Scotland account? It's fine as a current account. I assume this is the current account you're talking about. You can get an add-on called Vantage, which will give you some interest on some savings. In fact, it will give you the same amount as you'd get with the Club Lloyd's current account. The difference between the two, the Vantage one has no charge at all. The Club Lloyd's one, you have to have 2 direct debits coming out to get the interest. And actually, you might need that on Vantage to get the interest as well. But in terms of a monthly fee, the Bank of Scotland one Vantage doesn't have a fee. The Club Lloyd's one has a £2 fee unless you pay £1,500 into the account every month. Now, that money doesn't have to stay there. You can move it in, move it out, move it in, move it out. You can do it in sections, 500 in, 500 out, 500 in, 500 out, and then a final 500 in, and then 500 out every single month. So you don't have to worry about that too much. But the reason I prefer the Club Lloyd's is because you get a choice of 6 free cinema tickets or 12 movie rentals in a year, or a magazine subscription. So I would go for that one over the Bank of Scotland and the added on Vantage. Other than that, there aren't really any fantastic features. Nikki Preston, hi to Nikki. Nikki has asked, any news from JPMorgan Bank in the UK, as nothing is posted in the media for months. Yeah, now we heard about this towards the beginning of the year, maybe January, February time, that there was going to launch a new current account, probably a digital current account here in the UK from JPMorgan, from their Chase brand, and it would be in the summer. Well, we're in the summer. We've still not heard anything. I've not heard anything else yet. I wonder whether they're just waiting for the pandemic to ease up a little bit. Who knows? But don't be rest assured, as soon as I hear anything, I will be telling you all about it. Whether that's, there's nothing really to say, it's pretty bog standard, or hopefully there's some exciting things going on. But I will let you know, don't worry. Hi to my wife and Krishna, Freebie Queen and Johnny Springer. Nice to see you guys. Who else we've got? Got Rochelle. Hi, we've got Mummy Makes Money. We've got Shelson. We've got Mr. E. Davis. Lovely to have you guys watching. If you've got a question, just ask. I will do my best. Mark has said, quick update from Mark about he has got £75 in premium bonds in 2 months, with 10k in the first month and 12k in the second month. That is a really, really good return on that. I wonder how many of those came in the second month when you added in the extra money. The more money you have in there basically means the more of these premium bonds you've got, the better chance you've got of winning. I had an update because today was that if you have premium bonds, you hadn't already checked, they announced the results this morning if you won or not won. I won 50 quid, which is quite good. So far, since I first put premium bonds in, when was it? Was it January? Might have been January, could be February, I'm not quite sure. I think it was January. I've now won a total of £100. If I get another 75 quid in the next 5 months, then my money would have got a better return than if I put it in the best kind of easy access or even 1 year fixes at the time when I opened that account. So it's going well so far. No guarantees. That's the thing with premium bonds, is no guarantees. But while interest rates are pretty low, I personally am willing to kind of take that chance that I might get a tad less. Let's say I get 20 quid less, 15 quid less, for the chance that maybe I'll get a little bit more. I don't think, I know I'm not going to get that £1 million, but yeah, hey, it's better than buying a lottery ticket, because that means every time your money is invested every single year. So every single month, sorry. With a lottery ticket, you buy it once, don't win, it's gone, it's wasted. You still got your money with premium bonds. But again, it won't be for everyone. Mark says it also saves the grandparents £1,300 a year in bills as they were out of contract on everything. That is fantastic. That's a really, really, really good amount of money to spend. And it just shows you, doesn't it, that if you, right, you guys watching this now, I know a lot of you are super, super, super savvy and you're doing a lot of this stuff already. If you haven't got around to it yet, don't worry. You've still got time to try and find those savings. But just because you know this stuff and you're doing this stuff doesn't mean your friends and family are. So you can spread the word. You can either help them yourselves or send them my way or send them to other sort of resources that you use. If they could all save 1,300 quid in a year, they will love you forever. Okay, so see if you can do that. But well done, Mark. That's absolutely brilliant. Rafa says, hello. What savings account would you recommend at the moment? So I've talked about this already early in the video, Rafa. But what my top recommendation for you here is 2 places to go. Go to the YouTube channel. You're already there. That's where you're watching it. And look at the video I released on Sunday, the best savings accounts in the UK, my August update. Watch that. That will give you a really good update. And if you also want to just check for any changes, because these accounts can change on a daily basis, then there is a whole best buy list to the best savings accounts over at becleverwithyourcash.com. So head over to either or both of those, and that will hopefully answer. And also, you can watch the start of this because I talk about it quite a lot because a few people have already asked similar questions. So let's have a look. So Rodolfo has said, hi Andy, do you think it is essential to a new person in the UK less than a year to open a high street bank? I'm planning to buy a house in the future. Currently I use Monzo. So some interesting things here. I mentioned earlier on about why I think it's a good reason to people have more than one current account. And having one, a high street one, a bricks and mortars one, I think is a really good option if you've got multiple accounts, because just in case something goes hideously wrong, the apps go wrong, signals all go everywhere, your Wi-Fi, if you want to walk up and talk to a person, if you've got a branch, and we know there's a big problem there, so many of these branches are closing more and more every single year, I like to have an option for a bricks and mortars bank available to me. So I would say absolutely do that. Additionally, interesting thing here, this is if you're on Monzo or with Starling, unlike a lot of the other sort of established banks, for some reason right now, and I'm sure this will change, but they only currently report to 2 of the 3 credit reference agencies. Now, off the top of my head, I can't tell you which way this is. I have got that all written down in an article on the blog, so you can find that if you head to becleverwithyourcash.com, search for Monzo credit report, and it will pop up. The answer will pop up. But what this will mean is, let's say Monzo reports to Equifax and TransUnion, and Starling reports to Experian and TransUnion. It could be flipped the other way. If the person you are applying for any kind of credit with, not just a mortgage, could be a credit card, could be a mobile phone contract, if they look at the, you always say Monzo, let's say they could look at the Experian credit reference agency, that's who they look at the report with Experian, and Monzo doesn't report to them, as far as they're concerned, you don't have a current account. So that's another reason to have another current account with another bank that does report to all 3 of the credit reference agencies, and the main high street banks will all do this. Again, not a reason to avoid Monzo or Starling. Again, big fans of both of them. Starling is my main bank, but it is an important reason to have an additional account as well. Stuart says, what is my thoughts on Shell Energy? So they do a lot of things, don't they? I think they do broadband as well as energy. What I say with all these companies is if it's energy, it's focus on energy. Customer service is important, but it's less important because most of the time, as long as you can give your meter reading, or if it's a smart meter, it's giving the reading properly, you don't really have to deal with them at all, do you? It just kind of goes through, the bill comes through, and you're kind of happy. It's all sorted. It's all okay. And the most important thing to go for is the lowest possible price, or you might want to also consider green energy. And that gets quite complicated as well when you look into electricity versus gas as well. They're not, or something might be green electricity, but not necessarily green gas. So it might be slightly green gas, but not fully green gas. Go to a comparison site. The one that I like the most is Money Saving Experts Cheap Energy Club, because it has, I think, more editorial in it. A lot of the other comparison sites are just, hey, here's the best deal, right? In terms of the one they're getting paid for. This one gives you more information. So that's in terms of energy. In terms of broadband, and forgive me, Stuart, I can't remember if it was you who asked me about broadband earlier on. Customer service does come into it a little bit more, because let's face it, we all have problems with broadband, don't we? It doesn't matter who you're with. Someone somewhere will be with that same customer and having a great deal, a great sort of customer service. Someone will be having a really bad experience as a customer. I mean, you just can't do it. And sometimes your house is a problem. Sometimes it's just literally the cable connection coming out of your house to the thing could be different for you, but fine for someone else. So I again here look at the different options. see what the customer service reviews are like, see if people have a lot of problems with Shell Energy for broadband. Often the best deals for this are via comparison sites anyway. You get a decent chunk of money back, and it could be BT, could be Sky, could be Virgin Media, and that could make the price come down a huge amount and make it a lot more affordable. I hope that was helpful. We can talk about these another time. Now it's past. We've got loads of questions here on YouTube, so I'm going to try and race through these in the next sort of 10, 15 minutes. Quick one from Michelle. Is the Nectar credit card beneficial? The Nectar credit card, there are a few different ones here. There are ones from Sainsbury's Bank, and there's one from American Express. The American Express one, which is a Nectar card there, will give you 2 Nectar points every £1 you spend. That's the equivalent of 1% back. That is now the top paying cashback card on general spending. You can beat it in store specific retailers, for such as the Amazon Platinum card will pay 1.5% at Amazon if you're a Prime member, and the John Lewis and Partners card will give you 1.25% or the equivalent in points if you shop at John Lewis or at Waitrose. Otherwise, that Nectar card is the best one, the Amex Nectar. You cannot beat it at places that take Amex. Then Sainsbury's Bank Nectar cards are potentially interesting for the bonus points you can get from them. But the actual amount you earn in Nectar points, you may as well go for the Amex Nectar because you're going to get more. That's my thoughts on that one. So, Claire has said, I learned that my Lloyd's Gold account is going to charge $14.99 a month shortly. I've had this account for 30 years. I don't want to pay the monthly fee. Yeah, so this is something that's coming along. These are a lot of sort of older accounts that not necessarily open to people as much now. They are going to start charging fees for them. I would say don't pay for them. I can't imagine the benefits are that fantastic. I don't know a huge amount exactly what you're getting with them for each, because there's a few different ones with this is coming in. If you do want to keep some of the benefits, see if other banks are offering those equivalent. Because it could be insurance ones, and there are some decent options out there. The Nationwide one is generally pretty good there in terms of insurance packages. If you don't want to, you can obviously downgrade that Lloyd's account just to a normal Lloyd's account or that Club Lloyd's account that I mentioned earlier on. Again, do check all the terms and conditions there, but you will be able to switch down on that one. So Rob has said, I have a cash ISA pot of savings that's larger than my pension pot. Would you recommend I move some money into my pension instead? I already have an emergency fund or easy access cash. I'm 43, by the way. So, interesting one. So it could, do you know what? I don't know the answer to this one. With ISAs, you can transfer money between ISAs. And you want to transfer it rather than withdraw it, then move it in. Transfer it across means it keeps that tax-free status, which is really vital because you only get a £20,000 allowance every year. And if Rob, sounds like your pot is larger. What I don't know is whether you could transfer from a cash ISA into an investment ISA, stocks and shares ISA. If you can do that, that might be a decent option to consider. So you've got your pension going along over here, and you've got your stocks and shares investments going over here, again, for the longer term, but you'd be able to access them earlier. So say you wanted to retire at, say, 55 or something, you can access that because maybe your pension, you can't get it till later. Obviously, it depends on what your work pension is like. Don't know the answer to that, so that's one to definitely investigate. It could be you could transfer it to a cash ISA at a different institution and then transfer it into stocks and shares. One to consider, absolutely. There are benefits, though, of course, of putting more money into your pension. In terms of tax relief, that's well worth considering that as well. Adam says, do I have any passive income? Yeah, well, in some ways, a lot of what I work, obviously, a lot on the blog and on the YouTube. I'm still earning money from things I wrote a long time ago, videos I wrote, filmed maybe a year ago. So in that sense, I am getting passive income there, but this is my full-time job, so it's slightly different. In terms of other passive income, mainly it comes from like bank rewards. So I did a whole video on this a while ago. Go to the YouTube channel and look for passive income from bank accounts, or you'll find it maybe 2 or 3 months ago in all my videos. But this is like, you know, with a Halifax reward account, you can get 60 quid a year. From the Barclaycard Blue Rewards, you get 36 quid a year. I don't do much. I've set up some standing orders to move money around, maybe a few direct debits in there, but that's money that just comes in month after month. It's not a massive amount, but it's a decent chunk, which an easy one for most people to do without having to think about a bigger side hustle that could become a job. Lots to go. Right, let's see how I can do these. Okay. Bjorn has said, what advice do you have for students who need to open a bank account for the first time? I'm looking to start my first year of uni this September. So I mentioned earlier on, if you've been watching since the top, I mentioned I couldn't believe how close we are to September. All of a sudden, I'm like, it's nearly here. So that student bank account video and article, the update on that, I will be doing that in the next week or so. Won't be this week, maybe it will be next week, because you guys are obviously starting to look for the best account right now. There are some which offer a freebie. Some of them offer cash, which are nice little incentives. But the headline, if you can't wait until I update this video, the headline to look for here is the one with the best 0% overdraft, because most students, not all students, but most students are going to need to use some of their overdraft, and 0% means you don't get charged any interest on it, which means you can borrow. It means you should spend it just because it's there, but it's as a backup if you need to. If you haven't got enough money coming in from student loans, from grants, from any part-time job, that will help you get through without expensive debt, which will cost a lot of money, and you don't want to get caught into that trap. So that's the quick headlines there. I will do more on that very, very soon. 1CB, it says, can you pay your direct debits with your credit card, e.g. car insurance, phone bill? Would help if I could pay it with my credit card. Thank you. So you can't pay direct debits with a credit card because a direct debit comes out of your current account. That's what that is. You might be able to pay for some bills though with your credit card. And one which is people might not realise is a lot of your streaming services. So Spotify, Netflix, those kind of things. If you can pay for that with the long card, anything that wants the long card number, essentially, anything like that, then you can pay with a credit card. Now, sometimes there are discounts you can get for having a direct debit. In fact, the podcast that went out this morning, episode 212 of Cash Chats, one of the three things I talk about there is when direct debits can be a bad idea. And that's because sometimes, very, very occasionally, they're going to cost you more money. But the vast majority of time, paying by direct debit will save you money and will help you budget. So that's kind of where you are there. But certainly, if you're allowed to make a payment on your bill with a card, not from a sort code and an account number, with a card, then you can absolutely use your credit card and get those cashback points. Claire has said, the problem I found with the Halifax Ultimate Reward was that you mentioned you had to have £5,000 in savings with them already. Does that mean their everyday savings account? Right, I'm not quite sure, Claire. Send me a message on that one, Claire, if you can. You can do that on YouTube, not on YouTube. Send it on email, andy@becleverwithyourcash.com, or Instagram @AndyCleverCash. Send me a message exactly there, because I think we need to talk a little bit more back and forth on that. I think potentially there's a confusion there between the Halifax Ultimate Rewards and the Halifax Reward account. So probably better if we look at that a little bit sooner. Peter Cameron, do you know that you can have more than one Halifax Reward account? I'm not sure that's correct, Peter. I'm pretty sure you're only allowed to have one account. You can have an Ultimate Reward account and a Reward account. You possibly might be able to have a joint account as well to add that up. I can't remember off the top of my head. I think you can get a joint account as well, but you can't have additional ones. I'm pretty certain on that one, unless things have changed in the last few sort of days. Bjorn's asked about Monzo. Is it any good? Watch the top of this video. We talked about some uncertainty there in terms of has it got enough money to survive, which is important to know about, but not a reason not to get the account. And there is a whole review again on the blog and on YouTube, which goes into more detail on that one. So let's have a look. That's probably most of it now. I've got a question from Francis here. Is there a benefit to have a workplace pension and a LISA? I already have a help to buy for a house and I max out every month. Work pension only started 2 months ago, first job post uni. So in terms of retirement, your workplace pension is going to be the best bet because they will be contributing a little bit of money towards that. Plus you get the tax relief on that, which will be the equivalent to the bonus you get from the lifetime ISA. However, if you are going to be buying your first home, you might be better off with a lifetime ISA rather than a help to buy ISA. It's really complicated. You want to read up more on this. I have got a video on YouTube looking at what a lifetime ISA is. So if memory recalls, I do go through the differences between them there. If not, there's loads of content online you can compare the two. But it comes down to certain things like the price of the property, when you might want to buy the property. But it could well be that it's more money can be made from a lifetime ISA than it can from a help to buy ISA. But if you don't use it for buying that first home, this is probably the big one. If you don't use it for buying that first home, you can only access it penalty free when you retire, when you hit 60. Help to buy ISA, if you don't buy a home, you take that money out. It's yours. You can use it anywhere you want. So important things to talk about. Stuart says, top man, no worries, mate. Really happy to help you. Claire has said, I opted not to switch yet from my benefits from Lloyds today. When I open the Halifax Ultimate Rewards account, does that mean I won't be getting the £100 in 3 days' time? You've still got time to do the switch, but you have to start the switch today to get that £100. You have to switch to get that 100 quid. If you do not switch an account, it doesn't have to be the Lloyds account. It can be a different account if you've got a different one, but you have to switch to get that. Otherwise, you won't get the 100 quid. And finally from Peter, he's got 3. So Peter, maybe get in touch as well. Let me know what you've got and we can look into that a little bit more. Let's talk about the getting more of those rewards every single month. It's always great to hear about these little hacks and workarounds. So it'd be good to hear more about that. Thanks to all of you who have watched today. Really, really appreciate it. The next live will be on Tuesday of next week, the 10th of August. I will see you guys then.